with Faisal.
Hi guys.
Hello. How are you, Faisal?
I'm good. How are you, Nadia?
Good. This filter looks good on you.
Does it?
Yeah, look. You have lipstick.
Yeah, good.
Sorry, this is the best that we could do. Okay, so we are today with Faisal. Why we decided to do a live? So let's just discuss live with people that has been asking us some questions about mortgages. So there is not the news that we've been through sort of conflicts in the region. There has been a lot of changes in the banks lately, especially cabin crew. Most of our clients are cabin crew with Emirates. And 14th of April, yes, 14th of April was some changes.
Correct, yes.
The eligibility change. The IB was no longer giving mortgages for cabin crew who were still living in accommodation, and then they also increased basically the requirement of the salary, right?
So there was a couple of changes. So what we're looking at is in April, within a week, they changed from taking 50% of the allowances, limiting the LTV to 70%. After that, they changed it within a week to, if you do a salary transfer, they'll take the future housing allowance and give you 80%. However, the changes still remain where if you've got less than 25,000 salary, you don't do a salary transfer, your LTV is lowered. Anything over 25,000 dirhams salary, it's normal rules.
Let me translate for those who don't know what LTV is, loan to value. So it means if the property costs 1 million, loan to value, it means the bank will lend you up to 80%. However, this changed during the last month. The banks were giving 70%, right?
70, yes. So ideally, if you bought a property for 1 million, you're having to put down 30% down payment. So you get a loan of 700,000.
What about now?
Now, like I mentioned, below 25,000 dirham income, if you do a salary transfer, you can get 80%. If you don't do a salary transfer, then it's 75%. Anything over 25,000 dirhams is normal rules.
Also, another thing that you mentioned recently to us, and I want you guys to know, is see, many people were buying properties with a down payment that actually they were taking a personal loan to cover that down payment. This is against the central bank rules, so you should have a gap of 2 months. However,
3 months.
These are 3 months. However, these are the rules that people knows, and then they know how to break it. But now apparently is not really possible because the bank requires that you have proof of funds, is it?
No, so let me take a step back. So there is a grey area where people were taking out personal loan for down payment, but again, to clarify, you can't use it for down payment unless there's a 3 months gap. EMBD, which is normally good for cabin crew, may ask for proof of down payment. So if you're unable to show that, or you show it as a personal loan, then you may not get your final offer letter, which is your mortgage offer. With DIB, again, they still don't ask for any proof of down payment. But again, if you're having to do a salary transfer, one of the requirements for personal loan is having a salary transfer to that bank. So realistically, you wouldn't be able to do a salary transfer with DIB and get the set 80%, as well as salary transfer with the personal loan bank, if that makes sense.
Kind of. So basically, you need to have money.
Basically, yeah. So you need to have the down payment, because if you do a loan, you have to do a salary transfer with that bank.
Yes.
And if DIB's criteria for 80% is doing a salary transfer, you can't have both salary transfers. So then you wouldn't be able to be eligible for the 80% otherwise with DIB.
Okay, so banks are being, in general, more strict with lending money.
Correct, yes.
Let's say. Okay, there is some other questions being sent to us. What about the foreign investors? Any changes for them?
So for foreign investors, a lot of banks are a bit more skeptical about wanting to do foreign investors, which is non-residents. for example, Mashrik was doing 65%, they've lowered that LTV down to 60%. Adib, so Abu Dhabi Islamic Bank, was doing 65%, they've lowered it down to 50%. Again, there isn't any other drastic changes, like EMBD, I believe they're not doing any non-residents at all now. So again, they are constantly changing these because times are getting better. So again, just watch this space.
Okay, and I want to invite Joseph, that is here with us, and he has also some other questions that were received. Come, Joseph. Oh, time for improvisation. Now come here, come here. Sit.
Do you want me to sit this side?
No, you can stay down.
Oh, we both got this? No.
Yeah, hello viewers and hey everyone. Good to see you, Faisal, again.
Nice to meet you, Joseph.
I have a couple of questions from us and of course from some of our clients. Okay. And question number one. Have the banks in UAE recently changed how they assess flying hours, accommodation allowances, and variable income components for the crew applicant?
So DIB did mid-April change it to just taking 50%. Other banks did change to 70%, like Adib and EMBD. But I believe EMBD and DIB are both taking 100% now. With Abu Dhabi Islamic Bank for crew, they're good for crews as well. But it's just that they can't take future housing allowance, whereas DIB and EMBD are the only two that will take future housing allowance. Fab Bank is actually good for crews as well. They probably didn't know, but they need to be receiving that housing allowance already to be able to benefit from the full affordability.
All right, thanks for answering that. Question number two is for the off-plan financing, what are the percentages most banks are currently financing during construction?
So during construction, again, it is 50%. So it's still the normal rules where 50% needs to be paid by the client, and depending on the developer, the banks will do up to 50%. EMBD recently did change that, where they're looking to do up to 40 or 30%. However, 50% still needs to be paid by the client. What EMBD have done different is they've added an additional list of developers compared to the other banks.
Awesome.
At handover, though, I must add, is we can still do up to 80%.
Okay. Which banks would you consider as investor friendly, especially for the foreign non-nationals?
I would say investor friendly, I'd say Mashrik. I'd be very surprised. I think a lot of people are skeptical with Mashrik is because they ask for a pre-approval fee for non-residents and for any low document policies, which they've changed for a low document policy now. But Mashrik, the reason being is because they don't ask for your credit report. So normally a lot of banks will ask for your home country credit reports if you've got a mortgage or liabilities in another country. They'll be held against you in terms of affordability. With Mashrik, because they don't look at your salary, your credit report, they can just use your income and work out the eligibility for you, which makes it straightforward.
Got you. Awesome. And again, for the point of for the foreign investors, what kind of documentation is needed for them to to present to the banks for the approval?
So the normal documents you need even for residents. The only difference is on your passport. They need all the pages of the passport. An additional document they require is proof of address, which can be a utility bill or mobile phone bill. They require national ID. Any documents, the most important thing is it needs to be in English or Arabic. So if it's, for example, say Spanish or Italian, they have to be translated. So that's another cost that you may potentially incur, that you can help your clients if you know anyone in Dubai that can do that.
Okay, great. And again, in regards to the mortgage rates, do we expect these the mortgage rates to further adjust, or what is your anticipation in regards for the mortgage rates?
So I think with mortgage rates, again, I don't have a crystal ball. If I knew this, I'll be in a different place. But in terms of rates, they've been very stable. So in the past two quarters, the rates have gone down, but the banks have still kept the rates the same. So I don't see the rates going up or down. back in January, the bank, for example, Standard Chartered Bank did lower the rate where they were offering a non-salary transfer below 4%, which doesn't normally happen. But they only do it for, say, 1 or 2 weeks to get the volume in and then go back to normal. I don't see them going up or down. They'll probably stay the same.
Gotcha. Thank you. Well, we are nearing the end of the questions. Next question is, are there any restrictions in additional scrutiny for investors purchasing through offshore companies?
So again, the scrutiny is the same. So I think when I look at the risk factor, I think it will probably go down to whether you're a high-risk country. Company-wise, they want all the simple documents. So whether you're offshore, shell company, or whatever you may class yourself as, you start to provide your share certificate, the company profile and things like that. So as long as that's there, it doesn't really matter and the numbers are there. You'll be able to, there's no more scrutiny. It's more in terms of high-risk countries.
Mm-hmm. Okay. I mean, that's all from my side. I would just like to invite my colleague Anita to wrap up this. Thank you, Faisal.
Okay, just waiting for Danitza.
Yeah.
Hello.
Right.
Hi everyone. Yeah, so we got a couple of questions. How do banks currently access applicants with multiple UAE properties or who already has active mortgages?
So the way banks calculate this again is different. So they look at the overall eligibility. So for example, they'll take in consideration your income. If you've got mortgages right now, they'll calculate the monthly payments as your liability. As long as there's still income left, so you're within your 50%, they'll still be able to borrow you the money. So it's works same, it's just that they'll put a mortgage payment as your liability.
Okay. And for investors targeting golden visa, are there any structures that may affect qualification for visa?
No, so the only thing with golden visa is, for example, if they want a mortgage, we require like a labour card or staff ID. That's the only thing we require. Apart from that, no, there isn't anything different for golden visa holder.
Okay. Are post-handover payment plans viewed differently by banks compared to traditional mortgages?
Say that first part again.
Are the post-handover payments viewed differently by banks compared to traditional mortgages?
They're not, no. So in terms of, it still follows the same structure. So when you come to handover, the banks will just process it as normal. The only issue that you can have is, for example, if the customer has incurred late payment fees. So we've had an incident previously where the previous owner was receiving late payment fees until they're not cleared and we don't get a new SOA, statement of account, the bank won't go ahead with the check.
Okay. Thank you so much for coming here today and explaining all this to us.
I have more questions.
Oh, we have more
here you
questions.
go, Nadia.
Thank you, Danitza. Okay, you mentioned before that for foreign investors, they need to provide their statement of account, and it has to be translated, obviously.
Correct,
It cannot be in there. This translation, can it be any translation, AI, ChatGPT, Google, or needs to be official? Certified?
It has to be official. So the bank will check for the translation company's heading, so like the header and a stamp to show that it's official.
So these will have to be from UAE or from the country?
It can be from the home country, so sometimes the clients can go back to their banks and ask their banks to translate it into English. But we've had one case from Mexico where the lady did actually ask her bank and they translated in English. Mm-hmm. We've had another case where the agent had to find someone here and translate it into English. So both can work, as long as it's official.
Okay, and we've been mentioning about the changes and everything. Let's go back to one basic question. What are the rates right now for residents and also for foreigners?
So in UAE, you probably know there's for the people that may not know, is you get two types of rates. You get salary transfer. So if you're a resident and you transfer your salary to the bank, you can start off as low as 3.89% or even 3.75%. For non-salary transfer, you can go as low as 4.1%, 4.14%. If you're a non-resident, the lowest you're going to start with is 4.99%, rising all the way to 6%. Because there's more of a risk to the bank, therefore you then have to make that sacrifice and pay a slightly higher rate. But although they seem like a big difference from 3.99 to 4.99, sometimes the payments is probably just like say 70 dirhams, 100 dirhams, depending on how much you're looking to borrow.
Per month.
Yeah.
Okay. Also, this is relevant to the current scenario worldwide. Which countries cannot absolutely get a mortgage in the UAE?
So because we have a lot of banks that we deal with, so about over 20 banks, we can potentially try to always find a solution, but I think I'd like to say anyone that are sanctioned by the US. So if it's Iran, if it's Syria with some banks, just depends on, for example, SCB won't even do Nigeria. There's a few other countries that they won't do. So most banks tend to stay away from any US sanctioned countries.
Okay. Last question from my side is about co-applicants.
Okay.
Regardless of your country, there is many people that want to have a mortgage, but maybe they're a couple. Actually, tell us about the co-applicants, because not just everyone can co-apply with
Correct,
a friend, right?
No, you're right. Very good question, actually. So there's two types of ways you can add a person to the mortgage here or onto the property. You get co-applicant and co-borrower. The difference is co-borrower is someone that's not going on the mortgage, but will go on the title deed. Co-applicant is someone that will go on to the mortgage with you as well as the title deed. So you're going to now use their income as part of the eligibility as well. In both scenarios, it has to be blood relative. So like your parents, could be your husband, your wife, kids, as long as it's a blood relation, like your brothers, your siblings. In terms of documentation, so again, for co-borrower, because we're not using their income, we just need your EID, passport, or national ID if it's from another country, proof of address. If you're co-applicant, again, all the same rules follow as the applicant itself, so your pay slips, your salary certificates, and your liabilities, etc. So
regardless, co-applicant or co-borrower can be only blood related.
Yes, it can't be a business partner.
Can be a business partner.
Yeah, it can't be your cousin or foreign relative.
Okay, so this is actually a question from me. If my husband took the mortgage and he's a applicant and borrower, and in the title deed is his name only, can I be added to that title deed without being how is it called?
Co-applicant or co-borrower.
Yeah, without me providing my payslips and all of that, can I be added to the title deed?
From the mortgage side of things, I don't see the bank agreeing to that. You probably have to go on as a co-borrower at least. The reason being is because they need to know that there won't be a negative impact on the mortgage, or there won't be a risk to them not getting their money back for the mortgage side of things. From Dubai land, again, I'm not sure, you guys probably know it best for that, but from a mortgage side of things, I don't see it working out.
They won't.
Yeah, I don't think they'll accept it.
Okay. Yeah, because
you have to be at least as a co-borrower, because co-borrower, you're not providing your income details, but you start to provide your identification in terms of like your Emirates ID, passport, just to show that this is who you are and this is how you're related to this person.
No, I don't mean those documents. I mean if let's say I'm a stay-at-home, if I'm a housewife, that I'm stay-at-home, of course I will provide all my documents, but I don't have an income. Can I still be added to the title deed?
Yes.
But the bank needs to, there needs to be a process, huh?
Yeah, so that's what I meant. So if it's a co-borrower, you don't need to worry about your income. You can have zero income, or you could even be having income, you don't need to show that.
Okay.
You can go on to the title deed. Co-applicant is when you have to show your income, because I think you only do co-applicant if the person needs your income involved for the eligibility or affordability. So there's two types. Co-borrower, you don't need to worry, you're just going onto the title deed. The mortgage is not in your name, it's in your husband's name. Co-applicant, you're basically saying we're using both our incomes.
Okay.
So you get three sections on the application form. You're either applying on your own, you're doing it as a co-applicant, or you're doing it as a co-borrower.
Okay. I might want to wrap up with this also complicated question.
No pressure. No pressure.
No pressure. In the UAE, you can gift a property, but how that comes related to mortgage? Can I have a mortgage and gift that property?
No, so ideally, if you've got a mortgage on that property, you're liable for it, and for the bank to be able to, worst case scenario, say I gift it to you, and now you don't pay the mortgage, I can't come after you, so you wouldn't be able to gift it whilst there's a mortgage on that.
All right. So I cannot say I will keep paying again. The family situation, like the father takes a mortgage, but he wants to give this property to any of the child or wife.
You can do it as a will. So say, for example, the father can put it in his will that after he passes away or something happens to him, that the property goes into X, Y, and Z name. But in terms of gifting it whilst he's alive, whilst there's a mortgage on there, he's liable for it, so he would have to still remain on the property as to some extent.
Okay, how did you brought it to yourself? You mentioned will, and you mentioned if the person dies. As I understand, every mortgage comes with life insurance, right? Actually, you're paying monthly. You're paying your whatever fees. Part of that is for life insurance, correct? So
Correct.
if, God forbid, the borrower dies, then what happens to the property?
So what tends to happen with a will is normal is...
No, not the will.
Oh, the insurance.
Yes,
sorry.
I'm just talking about the insurance.
Yeah, so insurance, so say something happens to me, my property, the bank would then come and pay the mortgage off, and following that it will go on to, like, say, your next of kin, which is your, say, if you have a wife, if you have a husband, if you have kids, it will go to your family.
Okay, so the property debt is closed.
The mortgage is paid off.
It's paid off. Okay, I don't advise anyone to go
Yeah,
down.
I mean, don't go down that route. This is a disclaimer.
Yeah, but just to know, so the family stays.
So you're protected because at the end of it, you want to know that, say, if you've got young kids or anything, that property's still going to be passed on, and not just the bank's not going to just take it.
Okay, understood. Well, I guess we don't have any more questions, right? If you have any questions to us.
To you guys.
You didn't come prepared.
I didn't come prepared. Next time.
Okay, next time. Okay, so I'm gonna leave this live now. What I will invite you, whoever that is following us now or whenever you see this video, is please don't hesitate to send us any questions that you might have. Faisal is very well prepared, and even we just put him out of guard. Yes, exactly. But we will be able to answer all your questions. More important than sending your questions is just book a session, book a private call or a private meeting. We will sit with you, we will analyze your case, and we will always give you the best scenario how you can work your finances.
Yeah.
Many of you coming through are new in the country. Doesn't matter, we can meet and we can prepare you for whatever you will do after 6 months, after 1 year. If you already have one property, it doesn't end there. You can now build your wealth by buying the second property, third, fourth, fifth. There is a crew, not many, but there is few crew who have gone that route and they ended up having 10 properties, at least the ones that I know. So that person can be you, and it just starts with having the right guidance. Faisal here in the mortgage side, he knows everything. For us, property-wise, We don't know everything, but we will find out. And most importantly, we will focus on your specific profile, not sell you what we want to sell, but we will just have the conversation and help you in the best possible way.
I actually have a question.
Okay.
It's not a question,
No,
but it's more of a, it's something you touched on about planning for the future and say your second property. My question would be like, in this country, like for example, where I come from, UK, we get pension. So your company that you work for will pay for your pension, the government puts in pension for you, so when you get to a certain age, and coming to Dubai, it makes you think about, you need to think about your pension, so your second property can work as a pension pot, because how long will cabin crew be able to stay employed for, and if they've only got that one property, what's the other income that they would have?
Yeah, actually, I don't know if you know, but the cabin crew, after they turn 50, then the contract is not renewed. You don't get fired, you don't, but that's it. That's the story. You can go to other airlines, maybe go to Europe and then fly there, but you get end of service.
But it's being realistic, right?
Yes. There's no cabin crew in major airline here that is flying after 50, so they go. But the beauty of this, what we do, the beauty of Dubai not paying the income tax, that allows you to put even more money on the side.
That's it.
We have clients that only after 1 year of flying they got the first property. They're now preparing their profile in the second year to buy the second property.
That's it.
So from the calculations that I have made with my clients, it's safe to say that you can enjoy still your lifestyle and buy a new property every 1.5 years.
1.5 years?
Yes.
Wow.
If you do the things wisely, of course you need to save. You cannot spend all your money, but you can still keep your lifestyle. You can still eat something else than cup noodles on livers. And you will be able to buy the first, second, third, then once you have the first property, this is where Faisal will come involved, you can also release equity. But that is probably a conversation worthwhile another episode.
Another session, sure. But definitely food for thought for cabin crew, all of us actually, is making sure you don't just get stuck on one property. Now we plan to get another one to work as a pension pot for us when we can't work.
Absolutely, because sorry to break the news, but there's no more pension coming even in Europe.
Okay, I hope so.
Okay, let's meet for coffee, discuss everything, because the world as well is going through tough times.
Oh yeah.
Thank you, Faisal.
Thank you, guys.
See you soon.